confidence in business is more than just a feeling. It's a vital ingredient that shapes every decision a shop owner makes, from the smallest corner store to the largest department shop. At its core, confidence is the belief that things will improve, or at least not get worse in the near future. It's the sense that tomorrow holds promise, and that the risks taken today will pay off. For shop owners, confidence is the fuel that keeps their business running. It's what motivates them to open their doors each morning, greet customers with a smile, and plan for the days ahead. When they're confident, they invest, hiring staff, upgrading equipment, and ordering more stock. These actions ripple out, creating more jobs, boosting business for suppliers, and encouraging innovation. The result? A livelier high street, bustling with activity, where local shops thrive and communities flourish. But when confidence drops, caution takes over. Uncertainty makes shop owners second-guess their choices and hold back on plans for growth. Shop owners hold off on hiring, cut back on orders, and delay improvements. The energy that once drove their business forward starts to fade. This collective caution slows the entire local economy, making high streets quieter and less inviting for everyone. A drop in retailer confidence is a warning sign for everyone. It signals that the people who know the high street best are worried about what's coming next. It means shop owners, big and small, are anxious about the future, and that uncertainty can spread quickly through the community. Their anxiety leads to less investment, fewer jobs, and slower growth, not just for shops, but for everyone who depends on them. Understanding this feeling is key to understanding the challenges facing the UK's high streets and why some areas struggle while others succeed. When confidence falls, the effects are felt far beyond the shop door. Suppliers, delivery drivers, and even local charities can feel the impact. It's not just about mood, it's about the health of the whole community, from jobs to local services and the spirit of the neighborhood. That's why tracking confidence matters so much for shops and for all of us. Because when shops feel secure, our communities grow stronger together. The latest survey from the Confederation of British Industry, or CBI, shows retailer confidence at its lowest in 17 years. The CBI asks retailers if they feel more or less optimistic than 3 months ago. The score has plunged from -10 in August to -35 now, a dramatic collapse.
That number means far more retailers are pessimistic than optimistic.
The survey, covering 177 businesses from small shops to big chains, reveals widespread anxiety. This isn't just a blip. It's a deep, industry-wide concern. The last time confidence was this low was during the 2008 financial crisis. For it to be this bad again signals serious trouble. These numbers reflect real fear about the months ahead for UK retailers. It's a stark reminder that the challenges now feel as severe as those during the last major economic crisis. The main reason for this growing worry? Customers are spending less than before, and it's starting to show everywhere you look. People are thinking twice before making purchases, and many are choosing to save rather than spend. This shift in behavior is having a ripple effect across the entire retail sector. The latest CBI survey reveals that sales have dropped for the second month in a row, a trend that's making retailers nervous. It's not just a blip. This is becoming a pattern that's hard to ignore. For shop owners, falling sales mean less money coming in, but bills like rent, utilities, and supplier payments stay the same. The pressure mounts as cash flow tightens, making it harder to keep up with everyday expenses.
When income drops, tough choices follow: cutting staff hours, reducing shifts, or even making redundancies. These decisions are never easy, but sometimes they're unavoidable. It's painful, especially in small teams where everyone knows each other. The loss of even one colleague can change the whole atmosphere, but sometimes it's the only way to survive another month.
With less money, shops can't invest in training, new products, or improvements. Plans for upgrades or fresh stock are put on hold, and staff development takes a back seat. The business shifts into survival mode, and the high street loses its energy. Once busy shopping areas become quieter, and the sense of community starts to fade.
When shops can't innovate or refresh their offerings, customers notice the difference, and sales can fall even further, creating a vicious cycle that's hard to escape. It's a tough cycle. Less spending leads to fewer jobs and less investment, which hurts everyone, from business owners to employees and even local suppliers. The downward spiral is hard to break, And the longer it continues, the more difficult recovery becomes. The impact of falling sales goes beyond the shop floor. It affects the whole community, from local charities to schools and public services that rely on thriving businesses. Every lost sale is a lost opportunity for growth, innovation, and local prosperity. The challenge is not just surviving, but finding a way to turn things around and bring customers back. Without action, the spiral continues, and the future of the high street remains uncertain. That's why falling sales are such a serious warning sign for the economy. They signal deeper problems that need urgent attention before it's too late. Today, November 26th, the government announces its budget, a moment of huge uncertainty for businesses. Everyone is waiting to see if taxes will rise, squeezing both shop owners and customers.
Shop owners are reluctant to make big decisions until they know what's coming.
The fear is that higher taxes will leave households with less to spend, hitting shops even harder.
This uncertainty freezes plans. Expansions, marketing, and hiring are all put on hold. Businesses adopt a wait-and-see approach, slowing economic activity.
If disposable income shrinks, sales will almost certainly fall further.
The budget casts a shadow over the high street, making retailers even more cautious. The pause in decision-making is felt everywhere. Until the government's plans are clear, confidence remains low. This collective hesitation is a major reason for today's record low in retailer confidence. The whole sector is holding its breath, waiting for clarity. The real problem for retailers is that UK households are under pressure.
Shoppers are watching every penny, choosing cheaper options, and cutting back on non-essentials.
High living costs and economic uncertainty have stretched budgets thin.
People are worried about their jobs and saving more, which means less spending in shops.
This cautious behavior hits shops selling non-essentials the hardest: clothing, electronics, gifts.
When money is tight, luxuries are the first to go.
Economist Alpesh Paleha warns that weak demand will last well beyond Christmas. Households are focused on saving and paying down debt, not spending. Retailers can't just wait for a quick rebound. They must prepare for a long period of cautious customers. Until people feel secure, wallets will stay shut and sales will stay low. Uncertainty isn't just slowing sales, it's freezing big decisions like investment and hiring.
Investment means spending to improve the business. But right now, most shop owners are holding back. Upgrades, new equipment, and renovations are all on pause.
Hiring is risky when the future is unclear. So many retailers delay bringing on new staff.
Some even choose not to replace workers who leave, shrinking their teams over time.
This hesitation ripples out. Suppliers, builders, and job seekers all feel the impact.
When one business pauses, many others lose out too.
The CBI's deputy chief economist says this widespread caution is slowing the whole economy. Delayed decisions today mean fewer opportunities tomorrow. The longer uncertainty lasts, the harder it is for the high street to recover. Amid the gloom of recent economic headlines, there's a small but significant glimmer of hope. Shop price inflation is finally starting to slow down. After months of relentless price hikes, this shift offers a breath of fresh air for both consumers and businesses across the UK.
For years, rising prices have squeezed both shoppers and shops, making everyday essentials feel out of reach and putting pressure on small businesses. Now, the pace of increases is easing, and while prices are still high, the rate at which they're climbing is finally slowing.
The latest CBI survey shows inflation is moving closer to its long-term average, suggesting that the worst of the price surges may be behind us. This is a positive sign for the retail sector, which has struggled to keep up with rapid cost increases.
Stable prices help households stretch their budgets further, making it easier to plan weekly shops and manage bills. This stability may also encourage more spending, as people feel a bit more confident about their finances.
For retailers, slower price rises mean less pressure to constantly update prices and risk losing customers to competitors. It also allows them to focus on improving service and investing in their businesses, rather than just reacting to inflation.
A stable price environment makes planning easier and competition fairer, giving businesses a chance to recover and innovate after a challenging period.
But let's keep perspective. Prices are still much higher than they were just a few years ago, and many families continue to feel the pinch. A slowdown in inflation doesn't mean prices are falling. It simply means they're rising less quickly than before. The cost of living remains a real concern for many.
It's a welcome change, but not a full solution. shoppers and shopkeepers alike are still waiting for more meaningful relief.
The pressure is easing, but it hasn't disappeared. Many retailers are still cautious, watching costs and consumer confidence closely. This is a first step toward recovery, not the finish line. The road ahead will require continued resilience and adaptation. Retailers need more than just stable prices to regain confidence. They need sustained growth, support, and a return of customer optimism. Still, in a tough year, it's a rare bit of good news, and a reason for cautious optimism as we look to the future. So what could turn things around? Restoring confidence will take action on several fronts.
Retailers need to see more customers spending again, which starts with households feeling secure.
Government action that avoids big tax hikes or puts more money in people's pockets would help.
Targeted support, like reforming business rates, could ease costs for shops.
Beyond policy, retailers need stability, predictable costs, reliable supply chains, and clear economic direction.
When things feel stable, business owners are more likely to invest and hire.
Shops that adapt, improving service, going online, or offering loyalty schemes will be best placed to survive.
Recovery will require both government support and business ingenuity. The right mix can restore optimism to the high street. It's a tough road, but with the right steps, confidence can return. As of November 26, 2025, UK retailers face a tough path ahead. Confidence is at a 17-year low, a clear sign of crisis.
Shop owners are pausing investment and hiring, bracing for a difficult winter.
The immediate future looks bleak, and a quick fix is unlikely. The upcoming budget is crucial. A supportive one could spark hope, while a harsh one could deepen the recession.
Even with help, recovery will be slow.
Shoppers are more cautious than ever, and that habit may last.
Slower price inflation helps, but it's not enough on its own.
Confidence is about the future, and right now, retailers expect tough months ahead. But the sector is resilient. It's weathered storms before. With adaptation and support, optimism can return. The journey will be hard, but it's essential for the health of our high streets. Turning pessimism into optimism is one of the UK's biggest economic challenges today.